Today's video feels different. It's certainly hitting quite close to home. I live in the United States now, but I was born in Czechoslovakia. What used to be called Czechoslovakia, now it's two separate countries, the Czech Republic and Slovakia. A peaceful transition separation in 1993, but both countries are still extremely close, sharing a very similar language, family ties, friends across the borders. It's a little bit like Russia and Ukraine. If we put aside the politics, these countries are extremely close. They are really cousins, sharing families across the borders, a very similar language, and historically have been extremely close culturally. So it's very heartbreaking to see what's happening in Ukraine now, 1 week into the invasion by Russia. But keeping with the spirit of this channel, I talk about financial markets, about trading, about fintech. I want to talk about the energy markets and specifically what's happening to Russian oil, because even though we don't have any sanctions against the Russian energy sector in place yet, up to 70% of Russian crude oil is struggling to find buyers. Nobody wants Russian oil. And I also want to talk about why the United States, the largest producer of oil in the world, is importing Russian oil. All right, let's take a look. I think the best way to kind of frame this issue and put it in the right context is to look at a few charts. So I want to show you 3 charts that will really explain the issue at hand and why the energy markets are in upheaval and why the Russian oil markets are entering a huge crisis, because really nobody wants to be buying Russian oil. So this first chart very simply shows you the last 10 years of oil prices, right? You see a monster rally over the last 2 years since the bottom that we had at the beginning of COVID-19 when the whole worldwide economy shut down. Remember, in the United States, for a few days in April or May 2020, oil prices went actually negative to $40 a barrel because nobody had a storage space. That people were willing to pay other people to take oil off their hands because they just couldn't store it anywhere. But you have this monster rally over the last 2 years as the economy slowly reopen up, and now clearly this whole geopolitical issue in Ukraine is helping the prices go even higher. So this week we're above $110 a barrel. But really, to understand the biggest producers around the world and how that's kind of putting Russia in the middle of this, I want you to look at this table here that shows you United States, number one, clearly 18.5 million barrels a day in terms of production. But then you have Saudi Arabia and Russia at about 10.5 each. So they're kind of evenly splitting the second and the third place. So specifically Russia, right? When it comes to Russian oil, they produce about 10 million barrels a day. Out of those 10 million, 7 are going to exports. And so people have been focused so much on the pipelines in Europe, the whole Nord Stream project, which is a gas project that's been stopped to Germany. But really, people are focusing on the pipelines, but very few people actually focus on what is being shipped, right? So out of those 7 million barrels a day that Russia exports, 3.5 million, so half of that, is going to the pipelines. And the other half, 3.5 million barrels a day, is going onto the ships. This is all seaborne routes. So when you look at what is being exported out of Russia, China is the biggest single importer of oil from Russia. They take about 1.6 million barrels a day, which is also split equally between pipelines and seaborne routes. But really, it's the seaborne routes, it's the tankers, that is the real problem, right? Because at this point, for various reasons, European majors don't want to touch these. And when you look at the oil markets in Europe, there's only a few smaller players, smaller refineries that are kind of still in the market. But nobody wants to be booking these ships out of the Baltic Sea, the Black Sea, because of issues like ESG, shareholder pressure, liability, but also lack of wartime insurance. Because everybody's really afraid what's going to happen to this oil, right? Nobody wants to kind of make payments because of possible sanctions on the Russian oil exports. The third chart I want to show you here is very simply a Russian oil discount that is trading at right now to other types of oils, and we're close to $20 a barrel. So Russian oil is selling for $20 a barrel less than other types of oil from around the world, simply because people don't want to be buying it. And that's still without sanctions being in place, which, by the way, are now being discussed in the United States Congress. There's a bipartisan bill that is being discussed now. We're at the very beginning of March, right? So I don't know when you're going to be watching this, if that bill is actually going to come in effect. But we'll talk about this in a second as well. United States is an importer of Russian oil, and there's clearly a discussion about banning imports from Russia. So now all of this obviously leads to a whole set of other issues and questions, right? First, what happens to the Russian oil that is suddenly not being exported? How can we get more oil to replace the Russian oil? And what's really going to happen to the prices of oil and to the prices of gas at the gas stations that we're all kind of feeling every single day? Well, first of all, if all this Russian oil suddenly somehow stops, right? So the problem really here is the ships and the seaborne routes. Well, all the tankers are being loaded up, and eventually when everything is loaded up, there's no more oil to go that way. Now, if the pipelines stopped, and that really would kind of involve a European embargo on Russian oil, which is really hard to grasp, right? Because Europe really needs that oil. But let's say that just happens. Well, ultimately, the pipelines fill up, all the tankers fill up, and Russia is going to have to stop production at the fields. And if we're talking about replacing all of this production, all of these exports, we're talking about 7 million barrels a day. Well, in the United States, it's not a very easy decision, right? Because the whole shale production in the United States, you can do this overnight. This is a months/quarters kind of a type of a decision after you make a decision to increase production. In West Texas, by the way, which is obviously one of the largest production fields in the US, aside from Gulf and Oklahoma, there's not enough people to work in these fields anymore because all of these guys are working for Amazon, driving trucks now. And so you're really looking, if you really want immediate oil to come to the market, you're looking at Saudi Arabia, you're looking at UAE, and you're looking at Iran, right? Which again generates another set of issues with another deal with Iran and allowing all of this production onto the market. So finally, what's going to happen to the price of oil? If you kind of talk about the elasticity of oil, it's about 5 to 1. So for each 1% reduction in supply, the price goes up by 5%. So talking about the 7 million barrels of Russian exports, that's about 7% of worldwide volume, right? So if you reduce the supply of oil into the market by 7%, this 5 to 1 ratio implies about $30-$35 extra in terms of price when it comes to oil. So right now, relative to pre-war, pre-Ukraine war levels, we're actually getting quite close, right? Because that implies about $120, $130 a barrel. We're at about 113 today. This is early March. So we're just shy of these levels. So the market's actually not discounting that possibility very much, right? So we might be, people start talking about $150 per barrel of oil, which really starts turning away the consumers, and it just really screws up the whole world economy and the worldwide GDP. So now let's finally talk about the United States and why does the United States import oil and why does it import oil from Russia? So first of all, it's very surprising very often when you talk about energy markets in the US with people that despite being the largest producer of oil in the world, the United States has to import oil simply because it consumes more than it produces, right? It's very simply supply and demand kind of a law. So I want to throw up this chart here on the screen that shows you where the US imports oil from. And really, the biggest portion comes from Canada, unsurprisingly, but then you have Mexico and Russia right behind, right? So Russia is 8% of the imports in the United States, and that's about 700 million barrels each day that United States imports. So now the question is, why do we import oil from Russia when we export millions of barrels of oil from the Gulf Coast? And simply, there's really two issues here. One is something called the Jones Act. The Jones Act is a law that was passed 100 years ago. And the Jones Act in the United States limits the size of vessels that can transport goods between ports in the United States. So it's really simply, it's not profitable to transport oil between the US ports, between the Gulf and the West Coast and the East Coast on small ships. So that's reason number one. The reason number two, very simply, is that the West Coast and the East Coast are not connected by pipelines to West Texas and to Oklahoma, which is the biggest oil storage hub in the United States. There's just no pipeline connections. So now when you look at how much Russian oil is going where, right? So about 50% of that Russian oil is being shipped to the West Coast where it's being processed. Again, because it's really, West Coast is not connected to Texas, to Oklahoma by pipelines. So it's receiving, the refineries on the West Coast are receiving Russian oil. About half of it. 25% of it goes to the East Coast. Again, same issue, no pipelines and the Jones Act. And the remaining 25%, the last quarter, goes to the Gulf Coast. And the reason it's going to the Gulf Coast is that Russian oil has a higher sulfur content. So for certain products, certain grades of oil that are being refined, that higher sulfur content is useful. So the Gulf Coast is also receiving Russian oil. So much for a quick chat on the Russian oil energy markets. And I do want to bring this home again, like I started this video. This is something that's very close to my heart. Like I said, I was born in Czechoslovakia. Slovakia today is a separate independent country that is neighboring Ukraine, right? The Ukrainians are, this could happen in Warsaw, this could happen in Prague, in Bratislava, in Budapest. This is very close to home. And so I want to leave you with a quote by Václav Havel. Václav Havel was the first president of Czechoslovakia, then the first president of the Czech Republic when we separated in 1993 from Slovakia. He was really, if you've never heard about Václav Havel, he was the Nelson Mandela of Eastern Europe, imprisoned for his views during communism, a writer, a playwright, a very, very decent human being, celebrated in the Congress in the United States multiple times, friends with the Rolling Stones, a legend. And he has this quote on Russia that I do want to read here to conclude this video. I think that for many centuries, there is this Russian problem, and that's the fact that Russia doesn't know where it begins and where it ends. Even though it's the largest country in the world, it somehow feels that it's still somewhat small, and that even negligible neighbors are a threat. I truly hope this conflict in Ukraine resolves soon, and that the Russian people choose a different leadership very, very quickly.